First, let's get to the big story of the day with the markets, and that's coming from the latest down in Washington, D.C. We have Fed Chair Jerome Powell wrapping up a second day of congressional testimony. Now, the central bank leader acknowledging concerns in the markets, which is fueling investor optimism over a rate cut.
It reflected the real concerns that arose really beginning in May. You saw business confidence surveys gapping out and quite negative. Fairly broadly. It was a bit of a confidence shock. Now, I think some of that has recovered, but that in part is because we have stepped forward and indicated that that's what happens is we address that through our policy and indicate at our last meeting that we were looking at changing rates. I mean, the bottom line is the economy is in a very good place.
We have Brian Chung. We're also joined by Jo Song, U.S. economist for Bank of America. And Brian, let me start with you. At the very end there, we had Fed Chair Jerome Powell saying that the U.S. economy is actually in a pretty strong place. That then begs the question, why the heck are we talking about a rate cut?
Yeah, well, I mean, because I think they set the tone in the June 19 meeting, right? So they removed the word patient in the last meeting and said that we're going to act as appropriate to sustain this expansion. Translation, they'll do whatever they need to do. And if you see downside risk, then what to do is to cut rates. So also interesting, there was a little tidbit right before that clip that we just played where he acknowledged that central banks around the world have also provided more accommodation. Kind of interesting that he used the word also. May have been a little slip there, but hints that maybe the Fed has already started its accommodative process as far as its signaling has been concerned.
Jo, from where you stand, do you think that the Fed should be cutting rates at this point, and by how much?
Well, so it does seem a little early to us. If you look at the past data, it doesn't really warrant a cut. But I think what we got from Powell is that he's really worried about the outlook, right? So the operative word from him is the global conditions have deteriorated, right? So he's worried about the future looking out indicators. He's worried that the growth is going to slow down more than trend or where we've been so far. So he wants to get out of that. He wants to be proactive in making policy rather than being reactive. So maybe if in the hiking cycle, if they were data dependent, they're now being outlook dependent for the cutting cycle.
Jo, if we do see the Fed, and it's most likely that we will cut rates, the big question is whether it will be by 25 basis points or 50 basis points. If we get a 25 basis point cut, do you think that will be enough to see another leg to the upside in the markets?
I think there's going to need to be multiple 25 basis points cuts from July if that does happen. Right now, we have priced in 3 25 basis points going forward in July, September, and in November. I think that should be enough to stabilize economic conditions and potentially give enough to markets to actually at least sate them for the time being.
Brian, we got some key U.S. economic data out today. I know that you've been digging into this. We got jobless claims actually falling to a 3-month low. We also got a read on inflation. When you dig into this, what does this tell us about the health of the U.S. economy?
Yeah, I mean, I was actually hoping that Powell in this testimony today, because that data came out in the morning, would kind of talk a little bit more about some of those readings, but nothing kind of too relevant to that. But for what you mentioned, I mean, the jobless claims went down 13,000 from last week, and then core CPI actually 2.1% over the last 12 months. So that's above the 2% objective that the Fed has. But they don't measure core, or they don't look at core CPI as a preferred measure, right? They look at the PCE, personal consumption expenditures, which actually shows the kind of cost that consumers actually pay as opposed to the prices that producers are invoicing at. So kind of a little bit of a change there. When you do look at PCE, it has indeed been running below 2%. So for those that are looking at the numbers this morning and saying, hey, inflation's running hot, the Fed is at its mandate, well, the Fed might say, actually, we still might have a little bit of work to do.
Jo, one of the things that stuck out to me and the notes that you sent over was the fact that you said that the Fed is now data independent. Just in terms of what this could mean, how the markets could interpret these types of comments, what exactly are you trying to get at?
I mean, Brian hit on the nail, right? We've had strong inflation data today. We've had a strong non-farm payroll number last Friday. All of that would have argued that the Fed should delay the cut in July, right? They shouldn't go in July. But what we heard from Powell yesterday and today is that we're good to go, right? We're going to act as appropriate, which means that they're going to cut rates in July. So they basically removed all uncertainty in the markets that they're going to go in July, which means that they're no longer looking at the data and trying to assess policy from that point forward, right? So what they're focusing on right now is the outlook, and right now the outlook for them looks somewhat cloudy at the moment. So they want to provide a bit of accommodation.
When there's so many conflicting signals, I guess, and conflicting viewpoints going on right now, when we talk about what the Fed is going to discuss at their next meeting, Brian, what was interesting, one of the things that came out today was Atlanta Fed President Bostic. He was saying that the U.S. is actually in, quote, good position on both inflation and also on employment. He also went on to say that this then I guess would argue for the fact that maybe the Fed shouldn't be cutting rates yet at this point. Do you think that it's likely that we'll get some hawkish dissent here at the end of, or at the meeting at the end of the month?
And that's interesting commentary you bring up. I mean, a lot of people had perceived Bostic as maybe being one of the more dovish members of the Fed, but when you read commentary like that, I mean, that sounds like maybe he's not so on board with a rate cut, maybe even as early as the July 31st meeting. But for what it's worth, he's not a voting member of this FOMC. But for what it's worth, John Williams, the head of the New York Fed, who is a voter, he mentioned actually only about a half hour ago that signs do point to slowing growth based on the economic indicators that we've received as of late. So, there's a lot of different multiplicities of ideas on this. We saw that in the dot plot in the June 19 meeting. So it'll be interesting to see as we head into these next few weeks what other data points we'll get and whether or not it changes the thesis for what we should see in that July 31st meeting.
All right, Brian and Joe, thanks so much for joining me today.